Hello, my dear CA final students. Welcome back to the live MCQ session. And after quite a long time, I'm meeting you all in live. So I'm starting the first question. Mr. Balaji is a registered person under GST in the state of Andhra Pradesh. He sells goods to his customers locally within the same state. He has been appointed as an agent by Clean Energy Limited, a company registered under GST in the state of Karnataka. During a financial year, Clean Energy Limited sends taxable goods worth rupees 5 crores from its Bengaluru store to Mr. Balaji, who sells such goods for 5 crores by raising invoice using his GSTIN. Mr. Balaji receives a commission of 60 lakhs from Clean Energy Limited during the said financial year. Compute the value of supply of Clean Energy Limited and Mr. Balaji for the financial year, assuming that the amounts given above are exclusive of GST wherever applicable. In this question, actually the answer is, in case of Clean Energy Limited, it will be 4.5 crores and Balaji 5.6 crores. Only 9% of the students, option D is the correct answer, only 9% answered it correctly. So actually, what is this question about? Principal agent transaction. Whenever agent is acting on behalf of principal, so therefore principal to agent will become supply, again agent to buyer also will become supply. If you observe here, Mr. Balaji is the agent, Clean Energy Limited is the principal, and Balaji has been appointed by Clean Energy Limited as an agent, and Balaji is raising invoice in his name, Balaji's name. So you can see the wording, Balaji sells such goods for 5 crores by raising invoices using his GSTIN. So which means that, so he is an agent acting on behalf of principal. When he is an agent acting on behalf of principal, he is raising invoice for 5 crores. So 5 crores will be added in his value. Even that 60 lakhs commission also will be added in his value. So what is the value of supply of Mr. Balaji? 5.6 crores. Then what is the value of supply in the hands of that Clean Energy Limited? So it will be 4.5 crores. Why sir 4.5 crores? Because there is one rule. Rule 29. What does Rule 29 says? In case of principal agent transactions, it is open market value or 90% of the resale price. What is open market value? Not given. Goods worth 5 crores is not the open market value. Even if you take 5 crores as open market value also, but 90% of resale price is only less na. So what is the resale price? 5 crores. 5 into 90% is 4.5 crores. So therefore, the correct option is option D, that is Clean Energy 4.5 crores and Mr. Balaji 5.6 crores. So that is the correct answer in this case. Only 10% of the students have answered it correctly. Now we are moving on to the next question. Now, while reading the question itself, please focus so that in the 2 minutes, you will be having only computation time and just checking the things, okay? So focus fully while reading the question. Messrs. Raman Plastics is a manufacturer of plastic toys. It is registered under GST in Shimla, Himachal Pradesh. It furnishes the return on monthly basis. It procures its raw materials from Punjab. During the month of April, it purchased material of 35 lakhs and paid IGST thereon amounting to 6.3 lakhs. It supplied 30% of its production in the state of Jammu and Kashmir, whereas 70% of its production was supplied, taxable at 0.1% to a merchant exporter during the month of April 2021. The returns for the month of April was filed on 15th May 2021, whereas the due date is 20th May 2021. What is the proper refund option and the last date up to which the taxpayer can claim refund? What is the proper refund option and what is the last date by which taxpayer can claim refund? That is the question. Now you read the options and select which is the proper option. Your time starts now. Good. So therefore, please be little fast, because now I want you to do this 2 minutes and try to be, because that's the reason why I asked you to focus while reading the question itself. Okay. Now in this question, actually it is not deemed export refund. It is refund on account of inverted tax structure. Why refund on account of inverted tax structure? Remember, whenever I am making supply to a merchant exporter will not have advance authorization, will not have EPCG license, will not be an EOU. So supply to merchant exporter will not come under deemed export. That is the reason why we have a concept of inverted tax structure. So what they are telling, whenever you are making supply to merchant exporter, you treat it like chargeable to GST at as low as 0.1%. So I am making sale to a merchant exporter. So it will be chargeable at what GST? 0.1%. So now in that case, so as my rate of GST on outward supply is less than the rate of GST on inward supply, so it is like a inverted tax structure for me, and I will be getting the refund. And in case of inverted tax structure, so what will be taken as the time limit for making application? The time limit for making application is 2 years from the relevant date. What is relevant date? Is it the due date of filing return or the actual date of filing return? It is the due date. For inverted tax structure, it is the due date of filing return. So what is the due date of filing return? So 20th May 2021. So if you add 2 years, so it will be 20th May 2023. So option A is the correct answer. So good, 34% have answered it correctly. So it is refund on account of inverted tax structure, 2 years from the relevant date, and the relevant date is, so what should be taken? Due date of filing return. In case of deemed exports, it is actual date of filing return. So remember, for D it is not D. For deemed export it is not due date. Okay. For deemed exports it is actual date, whereas for inverted tax structure it will be due date. Okay. So that is with respect to this. And now sir, that merchant exporter, when he exports, what refund he will be getting? He will be getting refund of ITC. So he is exporting zero rated supply. Now he paid 0.1% na, that 0.1% he can claim as a refund, that will be called as refund of ITC to him. Okay, under zero rated supply. Good. Next question. This is the next question. Messrs. Buildwell Engineering Consultants, located and registered under GST in Gurugram, Haryana, provided architectural services to Taj India, located and registered under GST in Mumbai, Maharashtra, for its hotel to be constructed on a land situated in Dubai. Determine the place of supply of architectural services provided by Messrs. Buildwell Engineering Consultants to Taj India Limited, and what is the nature of supply in this case. So now you need to read the answers properly, options, and select. Your time starts now. So here, Buildwell Engineering Consultants, located and registered under GST in Gurugram, Haryana, provide architectural services. So service in relation to immovable property. What is the place of supply? If it is section 12, we need to take location of property. If the property is located outside India, location of recipient. Whereas in case of section 13, always it is location of property. Is it 12 or 13? Who is the supplier? Buildwell, located in Haryana. Who is the recipient? Taj India, located in Mumbai, Maharashtra. Both are in India, so section 12. So location of property should be taken, but the property is located in Dubai. So therefore location of recipient. What is the location of recipient? Mumbai, Maharashtra will be taken as the place of supply, and it is what supply? Interstate supply, because supplier is located in Haryana and the place of supply will be Maharashtra. Therefore it will be interstate supply, chargeable to IGST. Good. So then next, Aflatun Spares Private Limited, located and registered under GST in Haryana, supplied spare parts on FOB basis to Mr. Lakshmi Kurana, an unregistered person located in Rajasthan. Mr. Lakshmi Kurana booked the courier himself with Black Dot Courier Private Limited, registered under GST in Delhi for delivery in Rajasthan. Black Dot Courier Private Limited picked up the goods from Pune, Maharashtra, handed over by THARUN'S Private Limited, and delivered the courier in Rajasthan. While passing through the state of Uttar Pradesh, determine the place of supply of service provided by Black Dot Courier Private Limited to Mr. Lakshmi Kurana and what is the nature of supply. So actually this is what service? Transportation of goods service. For transportation of goods, section 12, what is the place of supply? B2B, location of recipient, B2C, starting point of the goods. Suppose if goods are going from India to outside India, it is always ending point of the goods, let it be B2B or B2C. Whereas in the context of section 13, other than mail or courier, ending point, mail or courier, it will be general provisions. But here it is not a case of section 13. It is a case of section 12. As per section 12, what should be taken? We need to check, is it B2B or B2C? So THARUN'S is making supply to an unregistered person. So means that unregistered person is only booking the courier. So it's a B2C. In case of B2C, what will be taken as the place of supply? Starting point of the goods. What is the starting point of the goods here? So Black Dot Courier pick up the goods from Pune, Maharashtra. So Pune, Maharashtra is the starting point of the goods and handed over by THARUN and delivered the courier in Rajasthan. So therefore Pune, Maharashtra will be taken as the place of supply. And what is the location of supplier? Black Dot Courier Private Limited. Where is it registered? Delhi. And therefore here this will be coming under Pune as the place of supply, supplier Delhi. So it's an interstate supply. So Pune and interstate supply is the correct answer. So 38% of the students have answered correctly. Very good. Keep it up. And next, the next question. Yes. Are you ready? Come on. In which of the following cases compounding of offence is not allowed for the first time under section 138 of CGST Act? Obstructing an officer from doing duty. A person who has been convicted for an offence under GST law by a court, ITC default, erroneous refund, or books of accounts default. Choose the most appropriate option. So the question is, in which of these cases compounding of offence is not allowed? See, we need to know this concept, compounding of offences. There are some cases first time compounding is not possible. What are those cases where first time compounding is not possible? So that is obstructing an officer from doing duty, tampering material evidence, an offence which is also an offence under any other law, or already imprisonment order has been passed against that person. So these are the cases where first time compounding, even failure to furnish information called for. These are the 5 cases. So what are those cases? Obstructing an officer from doing duty, tampering material evidence, and then failure to furnish information called for, an offence which is also an offence under any other law for the time being in force, or imprisonment order already passed. In these 5 cases, first time compounding is not possible. But the remaining ITC default, invoice default, collected amount as tax not paid within 3 months, erroneous refund, okay, books of accounts default, these are the cases where first time compounding is possible, but subsequent compounding is not possible. These are the 5 cases. So therefore, here the answer is number 1, yes, first time not possible. Number 2, a person has been convicted for an offence, yes. 1 and 2, not possible, and in all other cases. So the correct option is 1 and 2. Very good. So 45%, approximately 50% of the students answered it correctly. I am so happy for you. Come on, we are moving on to the next one. Guys, to everyone I am requesting you, so I am not only just giving you the answer for that, I am also giving you the explanation for that, okay, so that you can learn this. So don't get demotivated. So answer something, even if it is wrong, it's okay, you learnt it. What if the same MCQ comes in exam? You will be able to happily write. That is the objective, okay. So yes, come on, next one. Mohandas, a registered person, has supplied goods to Karamchand under his own invoice on behalf of his principal Krishnadev, a registered person. Which of the following statements is correct? It's a simple question. Even then I am giving you 2 minutes time. Come on, make it fast. See, actually this is related to liability to pay tax in special cases. Whenever an agent is acting on behalf of principal, so for the supplies made by the agent, not only the agent but also the principal is jointly and severally liable. Okay, so here is the agent acting on behalf of principal? Yes, clearly given, on behalf of his principal Krishnadev. So when agent is acting on behalf of principal, for the supplies made by the agent, not only the agent but also the principal, both are jointly and severally liable. So both A and B is the correct answer. Keep it up. Very good. So majority answered it correctly. Both A and B is the correct answer. Now next question. Gear up. Come on. Which of the following statements are true? When in the question, when it is given true or false, be careful. So which of the following statements are true? Service provided by private ITIs to individual trainees in the fields not covered under Apprentices Act are not exempt from GST. Service by a state government and private service provider by way of transportation of patient ambulance are exempt from GST. Service of renting of medical shops in a hospital are exempt from GST, being healthcare services. Services provided by police to PSUs are taxable. Choose the most appropriate option. So see this, first one is actually true or false? True, because private ITIs, ITI refers to Industrial Training Institute. These ITIs and ITCs, if it is government, definitely they will be providing training in those designated trades under Apprentices Act only. But private ITIs or ITCs can provide training in designated trades under Apprentices Act or other courses also. So when they do other courses, private ITIs do other courses that are not exempt, that will be taxable. So first one is true. Second, service provided by state government and private service providers, transportation of a patient in ambulance is exempted. True. Second one is true. Third one is false, because service of renting of medical shops in a hospital are exempt from GST. No, renting is not exempted. Renting will be taxable. So third one is false. Fourth one, police to public sector undertakings. Yes, it will be taxable, because Department of Police is state government department and PSUs are not department of government. Only interdepartmental service is exempted. This is not interdepartmental service and it will be taxable. So the correct answer is 1, 2 and 4. So good. Then next, majority, very good. Keep it up, 80% correct. Next one, state whether following statements are true or false. So you need to select the proper option here, true or false. Any person aggrieved by any decision or order passed by an adjudication authority under CGST Act may appeal to such appellate authority as may be prescribed within 3 months from the date on which the said decision or order is communicated to him. No appeal shall be filed to appellate authority unless the appellant has paid a sum equal to 25% of the remaining amount of tax in dispute arising from the said order in relation to which appeal has been filed. Adjournment of appeal shall not be granted more than 3 times to a party during hearing of the appeal. The appellant tribunal shall have the power to refer back the case to adjudication authority that passed the said decision or order. Choose the most appropriate option. Majority answered it correctly. First one is true, because usually the appeal will be made within 3 months from the date of communication of order in case of first appeal. That's true. First one is true. Second one is false, because the pre-deposit penalty is not 25% always. So it is 10% is also there. So therefore that second one is false. So true, false. Then adjournment of appeal shall not be granted more than 3 times to a party during hearing of the appeal. True. So that is also true. Then appellate tribunal shall have power to refer back the case to adjudication authority. True. only the first appeal, that is appellate authority, is not having power to remand back appeal. That is, in the appeal stage, they cannot remand the matter back for fresh adjudication. Who? First appeal, first appellate authority. But the second appellate authority is appellate tribunal. They can remand the case for fresh adjudication. They can send back the case for fresh adjudication. So therefore, that is also true. Option C is the correct answer. Option C is the correct answer. And next one. Which of the following statements is false? ITC on works contract service availed by a software company for construction of its office is blocked. ITC on works contract service availed by a manufacturing company for construction of pipelines to be laid in its factory is blocked. ITC available on motor car purchase for giving it on hire. ITC not available on hiring of jeep by a wildlife sanctuary, which gives combo price for entry to sanctuary and jeep drive. So your time starts now. Answer which is the correct one. The correct answer is 2 and 4. First case is not false. It is true. ITC on works contract service availed by a software company for construction of its office is blocked, because any service or any goods or works contract in relation to construction of an immovable property is blocked credit. That's why first one is true statement. Second, ITC on works contract service availed by a manufacturing company for construction of pipelines to be laid in its factory is blocked. Wrong, because only pipelines laid outside the factory gate or telecommunication service ITC not available, but pipelines laid inside the factory gate ITC available. It's not a blocked credit, ITC available in that case. So second one is false statement. Third, ITC available on motor car purchase for giving it on hire. Yes. So when I am into the business of renting of motor vehicles, if I buy the motor vehicle, I can take ITC with respect to that. 4. ITC not available on hiring of jeep by a wildlife sanctuary. ITC available, because wildlife sanctuary which is collecting ticket is exempted, and renting of jeep by them will be taxable. So that's a mixed supply. So ticket is exempted, renting of jeep by them will be taxable. So therefore it will come under mixed supply. Highest rate is renting of jeep. So as it is taxable, on their inward supply they can take ITC. So due to that reason, fourth statement is also false. So 2 and 4 is the answer here. Option C is the answer here. Good. 50%, more than 50% answer correctly. Next one. Come on. See, please, I want everyone to participate. Select the answer, okay, within the given time. Sukimal, a sole proprietor, has to appear before the appellate authority. He decides to appear through an authorized representative. Which of the following persons can be appointed as authorized representative of Sukimal under GST law? Sohan, his son, who has been dismissed from a government service lately. Rohan, a company secretary on whom insolvency proceedings are initiated. Mukul, a practicing high court advocate. GST practitioner. Choose the most appropriate option. So, first case, Sohan, his son, who has been dismissed from government service lately. So, he cannot become an authorized representative. Any person who has been dismissed from government service cannot act as an authorized representative. Rohan, a company secretary on which insolvency proceedings are initiated, also cannot act as authorized representative because he is adjudged as insolvent. Okay. Then third, Mukul, a practicing high court advocate, yes, and GST practitioner, yes. So 3 and 4 are the correct answers in this case. Good. So 80% correct. Wow, keep it up, guys. Very good. Next one, 11th. So here 2, 3 and 4. Next one. A municipal corporation has invited online bids for maintenance of bus stops for a period of 1 year from 1st January to 31st December. The work involves composite supply of goods and service, wherein the supply of service is the principal supply. The value of goods constitutes 25% of the total value of composite supply. Mr. Kumar, Managing Director of Kiladi Contractors, located and registered under GST in Gujarat, wants to bid for the same. He seeks your opinion to determine the taxability of the above supply to quote the best price. Choose the correct option in this case. So let me answer this question first. So here government is required to undertake certain activities as per constitution, and they will outsource that activity to some other person. Now some other person who is providing any activity to government, divide into two. If it is a pure service, it is exempted. If it is a composite supply of goods and service, even then it will be exempted if the value does not exceed 25%, that is if the value of goods does not exceed 25% of the total. In this case, if you see, exactly it is 25%, value of goods is exactly 25% of total value. So therefore the answer is exempt. Good, majority have answered it correctly. And so I don't know why you guys selected it as GST payable, but actually GST is not payable in this case. So it is exempted, okay, because composite supply, we are providing services to government. Government includes, so central government, state government, local authority, okay. In that composite supply, value of goods does not exceed 25% of the total, therefore it will be exempted. Exempt is the correct answer. Then there is one query here. So to our friend Sanjay, sir, wouldn't be a person be disqualified only if he is adjudged insolvent and not just start-up proceedings? See, usually the moment for professionals, CA, CMA or CS, so only practicing professional can become an authorized representative here under the power of attorney. Now the moment when insolvency proceedings are initiated against them, automatically their COP will be cancelled. So because of the professional misconduct, so we have the ethics and guidelines like that. A company secretary, the moment when insolvency proceedings is initiated on him, his COP will be cancelled. When his COP is cancelled, he cannot become an authorized representative. That's why I have given there a company secretary where insolvency proceedings are initiated. Okay, that is that point. Then the next one, we are moving on to the next question. So the name of the state of recipient along with state code is required on the invoice where supplies are made to unregistered persons, supply of goods through an e-commerce operator are made to registered persons where the value of supply does not exceed 50,000, supply of service through an e-commerce operator are made to unregistered person where the value of supply does not exceed 50,000. Interstate supplies are made to unregistered persons where the value of supply is 50,000 or more. Supplies are made to registered persons. So this question may come in exam also because this is based on latest amendment. The answer for this, all of the above is wrong. Supplies are made to unregistered persons. We don't have to give the details of recipient in the invoice. Okay. Whereas supply of goods through e-commerce operator, actually we need to divide this into two. That is, whether recipient details needs to be mentioned in the tax invoice, that we will divide into two. If the recipient, that is if the value of supply is more than 50,000 or equal to 50,000, definitely recipient details should be mentioned in the invoice, let it be B2B or B2C. So if the value is 50,000 or more than 50,000, we need to definitely give the recipient details. If the value does not less than 50,000 and B2B also, we need to mention the recipient details. Whereas B2C means supply to unregistered person, divide into two. In case of services through e-commerce operator and OIDR services, in these two cases only, we need to mention the recipient details. In other cases, not required. So first case, not required. Second case, goods, not required. Third case, yes, required because it is supply of service through e-commerce operator. Interstate supplies are made to unregistered persons where the value of supply is 50,000 or more. Supplies are made to registered persons. So therefore 3, 4, 5 is the correct answer. Okay, 3, 4, 5 is the correct answer in this case. Then next one, Mr. Happy Singh is a resident of Chandigarh. The marriage of his daughter Kushi Kaur has been finalized with Mr. Lovely Singh, an NRI settled in Canada. The marriage is scheduled on 14 February in Chandigarh. Mr. Happy Singh wants to send 5,000 marriage invitation cards where the weight of the card is less than 10 grams to all his relatives and friends in India to attend the marriage. He has to send the invitation by speed post. He is not sure about the taxability of speed post service under GST regime. He seeks your help in determining the applicability of GST on speed post. Choose the correct option. See, actually here one exemption is there with respect to Department of Post. What is that? Postcard, inland letter and envelopes less than 10 grams. So here, even though it is less than 10 grams, but it is not a normal post, it is a speed post. Speed post, express parcel post and all will be definitely taxable. So therefore, a normal post, book post or registered post with less than 10 grams is only exempted. So here it will be always GST payable. So the answer is GST payable in this case. That is the answer. Okay. We are moving on to the next question. Which of the following statements are correct? Liquidated damages collected not as a part of contract for breach of contract to be treated as consideration and GST payable. Satellite launch services is exempt if provided by ISRO and other notified persons. All kinds of toll charges are exempt under GST. Slum sale is exempt under GST. Classical dance classes by Miss Sudha, where she is a partner in Dance Now Academy, and such academy collected 2,500 per month towards fees is exempted. Okay. So now, come on, answer this. Guys, don't leave. So even if you are not the topper, don't worry. So I wanted to give even for the second, third, fourth prizes also. So therefore, it's not about that. It's about the concept that you are learning. That is important. Okay. So which of the following statements are correct? Liquidated damages not as a part of contract. No, GST not payable. GST not payable. Only liquidated damages as a part of contract. Only GST payable. Not as a part of contract. GST not payable. So first case is false. So treat as consideration and GST payable, false. Then satellite launch service is exempted if provided by ISRO and other notified persons. True. Second one is true. All kind of toll charges is exempt under GST. So that particular statement, number 3, yes. Then 4, slum sale is exempt under GST, yes. Classical dance classes by Miss Sudha, where she is a partner in Dance Now Academy, and such academy collected 2,500 per month towards fees is exempted. No, it is taxable because dance classes only by a individual. So training in arts or recreational activities only by individual is exempted. So but by a firm or any other person will be taxable. Okay. So fifth one is incorrect statement. So therefore 1, so 2, 3 and 4 is only correct. 2, 3 and 4 is only correct. And next one. Yes, toll charge amendment is there, but toll charge by way of annuity is only exempted. But all kinds of toll charges, is not. In the sense, only by way of annuity. So that is not at all considered as toll charges. Na? Toll charges generally is exempted. I mean to say overloading charges, etc. That one. Okay. Then next one. Mr. Manjot is a trader supplying goods from his firm, Messrs. Singh Traders. The office of the firm is located in Delhi, whereas its godowns are located in the state of Uttar Pradesh, Punjab and Jammu and Kashmir respectively. Messrs. It showed 134 is correct in answer. Okay, fine. Let's check that. So Messrs. Singh Traders made the following intra-state supplies. So we have Delhi 21 lakhs and taxable supplies, Punjab exempted supplies 6 lakhs, Uttar Pradesh taxable and exempted supplies 3 lakhs each respectively, Jammu and Kashmir taxable and exempted supplies 8 lakhs and 3 lakhs respectively. Ascertain the states in which Mr. Manjot is required to take registration under GST. First, we need to see what will be taken as the tax aggregate turnover here. Aggregate turnover, if you see, 21 lakhs, Delhi, then Punjab 6 lakhs, Uttar Pradesh 3 lakhs, Jammu and Kashmir 8 lakhs and 3 lakhs. So 21 plus 6 plus 3 plus 8 plus 3, so comes to 41 lakhs. They are engaged only in supply of goods. So one of the state is in MMTN. No. Manipur, Mizoram, Tripura, Nagaland. No. None of the states in MMTN use stamp. So use stamp is Uttarakhand. It's not Uttar Pradesh, Uttarakhand, Sikkim, Telangana, Arunachal Pradesh, Meghalaya and Puducherry. Nothing is there. Normal. So what is the applicable threshold limit? 40 lakhs. And here it is 41 lakhs. As aggregate turnover exceeds threshold limit, they need to register. And where they need to register? Once their aggregate turnover exceeds threshold limit, they need to register in each state from where they make taxable supplies. If you see here, Delhi they are making taxable supplies, they need to register. And Punjab they are making exempted supplies, no need to register. Uttar Pradesh they are making taxable supplies, Jammu and Kashmir they are making taxable supplies. So therefore they need to register in Delhi, Uttar Pradesh and Jammu and Kashmir, but not in other states. Okay. So therefore option B is the correct answer. Option B is the correct answer. And one query here. So which question, guys, you asked me? This question only, na? Services provided. Yes. So here actually it should be 2 and 3 and 4. 2, 3, 4 should be the correct answer. Actually here 2, 3, 4 should be the correct answer. So because liquidated damages not as a part of contract, so to be treated as consideration and GST payable, incorrect. So with GST not payable. So 2, 3, 4 is the correct answer. Okay. And next one more query also one student asked, that is related to 50,000 point, less than 50,000, let it be interstate or intrastate, no need to give the recipient details. But in case of unregistered person, only in 2 cases we have the condition that we have to show the recipient details, that is with respect to OIDR services and services through e-commerce operator. Okay. Now let's move on to the next area. Which of the following value shall be excluded for determining the transaction value of a consignment for e-way bill? Value of exempted supply if the invoice has both taxable and exempted goods, delivery charges, central tax, state tax or union territory tax, integrated tax and cess, packing charges. It's a simple question. Definitely I know everyone will answer correctly. Come on, try. It's an easy mark for you. Okay. Actually, in case of e-way bill, we have a 50,000 limit. While counting 50,000 limit, we should not take exempted supplies. But taxes we need to add. Okay. Exempted supplies we should not take, but taxes we need to add. And all other inclusions what we have as per the GST valuation, that is section 15, inclusions are there na, that should be added. So we need to take the taxable value, add the GST. Okay. So this delivery charges, packing charges are to be included in the value, and even GST also to be included in the value. So there is a mistake here. So which of the following are to be excluded? So actually it is which of the following to be included. Okay. I just made a mistake while typing. So due to that reason, fine, it's okay. For learning purpose, let it be there. I am just removing the score for this particular question. Okay. I am removing the score for this particular question. So this score alone I am removing for everyone. Okay. And we move on to the next one. Yes. So this question I am stopping and I am going to the next. Actually it is which should be included. So I removed the score for that. Okay. Now see this. A company, Upa Limited, imported certain cloud services from apnacart.com for an amount of 52 lakhs. There is an additional charge of 2% as equalization levy on such service in India, which is recovered from the offshore service supplier by the government. apnacart.com passes the taxes to its customers by charging them as its internal policy. The liability to pay GST for the cloud services by such company, Upa Limited, assuming the rate of GST to be 18%. So answer this. What should be taken as a value and who should pay GST in this case? See, import of OIDR services. Import of OIDR services actually covered under FCM as well as RCM. Here, cloud services means it's a OIDR service. And import of OIDR services by non-taxable online recipient is only covered under RCM. But here it is not non-taxable online recipient. Other than non-taxable online recipient, then who will pay GST? The supplier, that is recipient, will pay. Only when it is non-taxable online recipient, it is FCM. When it is imported by other than non-taxable online recipient, it will be RCM. Here, Upa Limited will not come under non-taxable online recipient. So because it's a company and that too, so therefore they are registered. So therefore it is import of services. So by a company on which GST is payable by the company under RCM. So actually the first question here is that who will pay? RCM. And again, so whether it will be covered under equalization levy to be included or not. Equalization levy to be included. While computing the GST equalization levy, any taxes, duties and cess by whatever name called other than GST should be included. So that's why in this case what we need to do, 52 lakhs plus 2%. So we need to take plus 2% of that. On that we need to multiply 18%. So 9,54,720. So option D is the correct answer. So Upa Limited under RCM and GST 9,54,720. Then the next one. The next question, focus. Messrs. Kala and Associates dealing in sale or purchase of used or second hand cars is registered under GST. During the current financial year, it affected following intrastate transactions. Messrs. Kala and Associates purchased car 1, car 2 and car 3 from unregistered persons, car 4 from registered person who charged GST of 1,30,000, and accordingly Messrs. Kala and Associates have availed the input tax credit of the same. Messrs. Kala and Associates is not conversant with GST provisions, hence it has approached you for determining his GST liability. Assume that the applicable rate of tax is 18% and the amounts given above are exclusive of GST. So you need to select which of these is the correct option. So you are able to see, I think, the chart here, car 1, car 2, car 3, car 4. Just click on that, it will become big size. So you can see that and answer the options properly. Okay. See, actually this concept is related to margin scheme. So what happens in margin scheme, that is, whenever we are making purchases of second hand goods and sale of second hand goods, a second hand dealer, and that two purchases are made from a registered person, not availed ITC, or purchased from unregistered person. So the margin will be sale price minus purchase price on that GST payable. Here 3 cars are purchased from unregistered. So see the margin. If the margin is negative, ignore. First car, if you see, the first car is 7,50,000 minus 5 lakhs. So 2,50,000. You take 2,50,000 plus. Second car 2,75,000 minus 3 lakhs. Margin is negative. Ignore. Third car is 6,50,000. 6,50,000 minus 6,50,000. You take 50,000. Now fourth car, if you see, fourth car is purchased from a registered person on which GST of 1,30,000 has been paid, and they availed the ITC also. They availed the ITC also, which means margin scheme is not applicable. Suppose if they buy from a registered person on which ITC is not availed, then they will go for margin scheme. But here margin scheme not possible. So normal means full value. What is the full value? 9,50,000. Already 3 lakhs plus 9,50,000. That will be coming to 12,50,000. How 3 lakhs? First 2,50,000 plus 50,000 plus 9,50,000, 12,50,000 into what is the rate of GST? 18%. That is 2,25,000. From 2,25,000, we need to reduce the credit, input tax credit minus 1,30,000. So the difference will be 95,000. So 95,000 will be taken as the correct answer. Okay. So 39% of the students answered it correctly. Good. Even then it is a majority only. Then next question, question number 19. Come on. Messrs. Vishnu Megamart, a store located and registered under GST in Rajasthan, has come out with big discount offers at the time of Diwali on various gift items. In order to attract more customers, it has decided to supply a gift pack containing 5 packets of Zira Rams Namkeen, 200 grams each, taxable at 12%, 1 packet of roasted smoked almonds, 100 gram, taxable at 18%, 1 packet of Cornville chocolate, taxable at 28%, and 1 bottle of Teal fresh juice, taxable at 18%, in a single price of 1,000. State the type of supply and the rate of tax applicable on the same. It's an easy question. I know that you will make it correct and quick. Okay, it's a simple question, pa. Mixed supply, highest rate is applicable. Good. Everyone answered it correctly because 2 or more supplies not naturally bundled, because one can be supplied without the other for a single price. It is not a composite supply, it's a mixed supply, and the highest rate should be taken. It's an easy question, it's a giveaway. Everyone will get the mark for this. Next question, question number 20. State which of the following statements is incorrect. Read it carefully and answer. Service by an artist by way of performance in folk or classical art form of music, dance or theatre, if such consideration charge for such performance is not more than 1,50,000, is exempt. Service of life insurance business under life micro insurance product as approved by Insurance Regulatory and Development Authority having an amount of cover of 2 lakhs is exempt. Service by an acquiring bank to any person in relation to settlement of an amount up to 2,500 in a single transaction transacted through credit card, debit card, charge card or any other payment card service is exempted. Choose the most appropriate option. Your time starts now. Okay, first one. Actually the answer is all 3 are incorrect. All 3 are incorrect. You know why? First one, brand ambassador. The moment they act as a brand ambassador, definitely you will not get exemption, even though the amount does not exceed 1,50,000, taxable. So first one, brand ambassador, so taxable. Second, life insurance where the minimum amount is 2 lakhs. No, micro life insurance where the maximum amount is 2 lakhs is only exempted. So here it is taxable. And service by acquiring bank 2,000 rupees, that is not 2,500. So the correct answer in this case is 1, 2, 3. All 3 are incorrect statements. So option D, all 3 are incorrect statements. Then next, Style Saloon Limited provides vouchers worth rupees 1,000 valid for a period of 6 months to the customers who avail the service exceeding 10,000 in any month. The customers can redeem such vouchers for their hairstyling service taken from Style Saloon Limited. Mr. Dwarka availed services worth 12,000 on 3rd June from the saloon and issued a voucher of 1,000 on 5th June. He redeems the voucher on 4th September for hairstyling services from Style Saloon Limited. The time of supply of voucher issued to Mr. Dwaraka is. So come on, your time starts now. Okay, good. Actually this question is related to identifiable, non-identifiable vouchers, time of supply. So time of supply in case of identifiable voucher is at the time of issuance of voucher. Non-identifiable voucher is at the time of redemption. So here if you see, so what is an identifiable voucher? So whenever that voucher can be redeemed against a particular product or a service, it is identifiable voucher. Non-identifiable voucher means when the voucher can be redeemed against any product or service, it is non-identifiable. Here, this particular voucher can be redeemed only against hair styling services. So which means it will be coming under identifiable voucher. So for identifiable voucher, what will be taken? So this is the date of issuance of voucher. What is the date of issuance of voucher? So 5th June. 5th June will be taken as the answer in this case. Good, majority selected correctly only 5th June. Now we are moving on to next question. ASC, a registered person under GST, supplied goods amounting to 1,18,000 inclusive of GST, taxable at 18% to BSC, a registered person under GST on 30th September. BSC further sold such goods to Rakesh, a consumer, who came to his shop on 30th October in cash for 2,36,000 inclusive of GST, taxable at 18%. ASC issued a credit note of 11,800 for rate difference on 2nd November to BSC. Thereafter, BSC entered a credit note in its books for the same amount in the name of Rakesh without intimating him and providing any refund of the sum paid on 2nd November and reduced its output tax liability accordingly. As per the provisions of GST law, which of the above mentioned suppliers are allowed to reduce their output tax liability? So read that answer properly. Okay. See, just because the credit note is issued, that will not lead to reduction in our liability. What ASC is doing? ASC is giving the credit note to BSC. What is the time limit? So within that permissible time limit, that is 30th November of succeeding financial year or date of filing annual return, whichever is earlier, they are giving and they are making it available. Thereafter, BSC entered the credit note, but they did not issue it to the recipient. So which means recipient will not reverse the ITC also. So therefore, in this case, BSC cannot reduce, only ASC. Only ASC can reduce. That is the answer for this. The answer is ASC. Then next one, Mr. Alauddin, a stationery retailer located and registered under GST in Allahabad, has received order for supply of goods worth rupees 2 lakhs on 12th November from another local registered dealer, Mr. Jalaluddin. Goods were supplied under the cover of a tax invoice. Mr. Alauddin incurred the following additional expenses before the goods were delivered to Jalaluddin. Packing charges 3,000, freight and cartage 2,500, handling charges 1,500. Mr. Jalaluddin made full payment, including the additional amounts charged by Mr. Alauddin on delivery of the said goods, for which he was allowed an instant cash discount of 2,000. The applicable rates of tax on the goods supplied are IGST 18%, CGST, SGST 9%, and the amounts given above are exclusive of GST. Mr. Alauddin paid CGST 18,000 and SGST 18,000. As a tax consultant, determine the further tax liability of Mr. Alauddin. So what will be taken as the further tax liability in this case? Okay. See, simple. First of all, what is the extra amounts charged apart from 2 lakhs? 3,000 packing to be included as per 15(2)(c). Freight and cartage to be included. Handling charges 1,500 to be included. So total how much? That itself is 7,000. Now discount. See, discount is given on delivery, means after supply. Discount is given after supply, and the terms are not agreed before at the time of supply. So discount is not allowed as deduction. So therefore we need to take only 7,000. 7,000 into 18% we need to take. So what is 7,000 into 18? That is intrastate, means CGST, SGST 9%, 9%, 630. So option A will be taken as the correct answer. 630 and 630, CGST 630, SGST 630 will be taken. Good, keep it up. Then the next one. A purchase order with advance of 1,25,000 is received on 15/7/2017 for machine worth rupees 25 lakhs and entry duly made in seller's books of account. On 25/7/2017, the machine is assembled, tested at site and accepted by the buyer. Invoice is raised on 30/8/2017 and the balance payment of 23,75,000 is received on 10/9/2017. What is the time of supply in case of advance and balance payment? So answer it properly. Okay. Actually, it is 25/7/2017 in both cases. Why? Because in case of time of supply in case of goods, where supply does not involve movement of goods, because always in case of goods it is actual date of invoice or due date of invoice, whichever is earlier. And what is the date on which invoice needs to be given? Again, we need to see supply involves movement of goods or supply does not involve movement of goods. Here the goods are coming into existence, the goods are assembled at the site. When the goods are assembled at the site, supply does not involve movement of goods. When supply does not involve movement of goods, so what will be taken as the due date of invoice at the time of delivery? So what is the time of delivery? On 25/7, the machine is assembled, tested at site and accepted by the buyer. So 25/7 is the due date of invoice. Actual date of invoice is 38, whichever is earlier is 25/7. And on advances, GST not payable with respect to goods. So in both cases, it is 25/7 only. 25/7 is the correct answer in this case. Then there is one query here. Sir, why in the previous question, so 2 lakhs taxable value not included? Because there the question is, how much is the additional amount charged? So which means on 2 lakhs already GST charged. What is the additional amount charged? That is the question, because already they are collecting on 2 lakhs, 8 like that amount, whatever amount that may be, that is collected. So they are asking additional amount. For that additional amount only we did the calculation. Then next one, question number 25. Shah BD Company Private Limited is a manufacturer of cigarettes. It has been registered under GST in the state of West Bengal. The turnover of the company from the current financial year is 90 lakhs. The excise duty paid on the cigarettes removed is 10 lakhs. CGST and SGST paid on cigarettes is 18 lakhs each, which was charged separately in the invoice. The company also recovered actual freight of 5 lakhs from the buyers on the supply of cigarettes so made during the current financial year, and also charged CGST, SGST thereon. The company paid tax at 5% under reverse charge while availing the service of GTA of 5 lakhs. Compute the aggregate turnover of Shah BD Company Private Limited, assuming that the amounts given above are exclusive of GST. Now, we need to compute the aggregate turnover in this case, and I am just giving you 2 minutes time. Start now. Make the computation of aggregate turnover. Okay. See, actually aggregate turnover, while counting the aggregate turnover, so excise duty should be taken or not. The turnover of the company from the current financial year is 90 lakhs. Excise duty should be added, because what should not be taken in aggregate turnover is CGST, SGST. Excise duty should be taken. So 90 plus 10, 100 lakhs. And thereafter CGST, SGST should not come. The company also recovered actual freight of 5 lakh from the buyer on supply of cigarettes. So 5 lakhs also should be added. So 90 plus 10, 100 lakhs plus 5, 105 lakhs. And GST under RCM will not be taken. That is, inward supply under RCM will not be taken in aggregate turnover. So therefore, the answer is 105 lakhs will be taken as the answer. Option D. Okay. So that is the half portion that we have completed, guys. So therefore, we have completed 50%, that is 25 questions out of 50 questions we have completed. Now, I have a small announcement for you to make, that is, we are launching with a new book, that is Inquest IDT. So this Inquest IDT is a MCQ book, so that we are launching. So with 1000 plus MCQs with explanation, including case scenario MCQs of ICI is also included in this. And so what I have done is, with there are a lot of MCQ books. Sir, but sir, how your MCQ book is different from others? I have updated this book with all the provisions as on today, whatever is applicable for your exam. Plus, I gave the detailed explanation. This is how the inside of the book will be. So like questions we have, and even I have given like OMR also, like what you need to do is that you need to just take a pencil and do the shading, so that in exam it will be a practice for you, and you can also cross check. That is, usually some books below the question itself they will give the answer, so the student will see the answer and select. So I don't want to do that. What I did, entirely I divided chapter wise. This is segment 1, introduction to GST, and then next concept, taxable event under GST, like that I have made, and I have given the justification answer, detailed justification answer for every question like this. So justification, see, for one option itself, like one question itself, see how big explanation I have given. So detailed explanation, it is not just the answer. So detailed explanation, this is for every question. Every question there is a, this is next segment. In this also see the justification. For every question I gave the justification answer. Including case scenarios, MCQs also I have given the justification answer. Really I spent lot of time on this preparation because, you know, so I have not been active in the Telegram for few days because I was sitting and doing this work, and that's what I just wanted to unveil it before all of you on this Independence Day. And here this is the book which is segment wise MCQs with explanation answers, all ICA MCQs covered, case scenarios MCQs with detailed explanation, and it is fully amended and updated. So friends, if you want this book, you can place an order for this and you can visit the link below. Now continuing with the next question onwards. Mr. Prabhu, registered under GST in Mumbai, is in the business of trading of marble handicraft items domestically as also exporting the same. His annual turnover and input tax details are as follows. Mr. Prabhu exported the goods under LUT without payment of GST. Value of like goods domestically supplied by him is rupees 60 lakhs. Mr. Prabhu seeks your help in calculating the amount of refund of ITC which is eligible to claim under GST law. The refund amount is, so from this calculation, do that, how much is the refund amount? This is the question that we have here. Okay, so this question is related to refund of ITC. What is the formula for refund of ITC? Net ITC into zero rated turnover divided by adjusted total turnover. What is the net ITC? Net ITC is, first of all, when my outward supply is taxable, I can take ITC on inward supply. So take 12,50,000. Then next, when my outward supply is exporting, I can take ITC on inward supply. So take 5,50,000. So 12,50,000 plus 5,50,000. So 5,50,000, that comes to 18 lakhs. But when my outward supply is exempted, I should not take ITC on inward supply. So don't take 5 lakhs. So 18 lakhs. 18 lakhs into zero rated supply divided by adjusted total turnover. What is a zero rated turnover? 75 lakhs. And here domestic value of that goods domestically supplied is 60 lakhs. So 60 lakhs into 1.5 times 90 lakhs or 75 lakhs, whichever is lower. So 75 lakhs is the zero rated, and in the denominator you should not take exempted supplies because ITC do not pertain to exempted. So in denominator you should not take exempted supplies. So in the denominator it is only 1 crore 25 lakhs plus 75 lakhs. So that is 2 crores. So therefore 18 lakhs into 75 divided by 200, that will be 6,75,000 is the correct answer. So the correct answer for this is 6,75,000. Good, majority answered it correctly. Keep it up. Now we are moving on to the next question. Mr. Vidhan Kapoor transports some exempted goods worth rupees 2 lakhs without bill of supply and taxable goods worth rupees 5 lakhs excluding GST at 12% without tax invoice and e-way bill. Proper officer passed seizure order under section 129 of IGST Act. And what is the penalty payable for release of goods if owner of the goods come forward to claim the release of goods? So concentrate and select the proper option in this case. Okay. So what is the penalty in case of section 129? Section 129 will come into picture whenever the goods are being transported and those goods are intercepted by the proper officer under section 68. So when the proper officer intercepts the vehicle, if the goods are not having proper documents, e-way bill or proper invoice, etc., in that case, so what will happen? So the proper officer will intercept the vehicle and he will seize the goods and the conveyance, and thereafter for release of the goods and conveyance, he will be passing a penalty order. If we pay that penalty order, then the goods and conveyance will be released. And what is the penalty amount? It depends upon when owner is coming forward, when owner is not coming forward. When the owner is coming forward, how much is the penalty? For taxable goods, it will be 200% of tax. So first of all, here if you see 5 lakhs into 12%. 5 lakhs into 12% is how much? 60,000. So 60,000 into 200%, because the penalty is asked under IGST Act. As the penalty is asked under IGST Act, so 60,000 into, so take full 60,000 into 200%, so which means that will be coming to 1,20,000. But stop, 1,20,000 will not be taken. Thereafter, for exempted goods, how much is the penalty payable? 2% of the value of goods or 25,000, whichever is lower. So what is 2%? 2 lakhs into 2% is 4,000. So 4,000 under CGST plus 4,000 under SGST, so 8,000. So actually the answer is 1,28,000, not 1,24,000, 1,28,000, because 2% of the value of goods, so or 25,000, whichever is lower, so 2%. So 2% is 4,000 under CGST, but the question is under IGST. So therefore the answer is 1,28,000. It's not 1,24,000. So therefore 1,28,000 is the correct answer in this case. Then next, state whether the following statements are true or false. Zero rated supply means supply of any goods or service or both which attracts nil rate of tax. Exempt supply means export of goods or service or both, or supply of goods or service or both to a SEZ unit or developer. Or third one, non-taxable supply means supply of goods or service or both which is not leviable to tax under the CGST Act but leviable to tax under IGST Act. ITC may be availed for making zero rated supply of exempted goods. So choose the most appropriate option. Your time starts now. Okay, first one, zero rated means supply of any goods or service on which attracts nil rate of tax. False. Exempt supply means export of goods or service. False. Non-taxable supply means supply of goods or service which is not leviable to tax under CGST or IGST. So therefore that is also false. ITC may be availed for making zero rated supply of exempted goods. Yes, exempted goods, the moment it becomes export, it will become zero rated, so we can take ITC. So therefore that is true. So option A is the correct answer in this case. Okay, now next one, 29. In respect of consignment supplied on 20th August, provisional assessment was resorted to by a person who files returns on a monthly basis. The assessment was finalized on 20th November and the taxpayer became liable to pay differential IGST of 10,000. The taxpayer paid this amount on 20th December. The number of days for which the taxpayer is liable to pay interest are. So this is interest computation, number of days. Okay, time's up. The number of days is 91 days, not 122 days. So 91 days is the correct answer. Why? Because actually we need to compute from the first date after due date. What is the due date here? If 20th August is the month in which goods are supplied, for 20th August the due date will be 20th September. So therefore in September you need to take 10 days, and October 31 days, November 30 days, and December 20 days. So that is 91 days is the correct answer. So you would have counted from 20th August, 21st August itself. No, you should count it from 20th September, because 20th August is the date on which supplies is made. So we need to count from 21st August. Then next one, Shri Ram Seva Trust, registered under GST, is a charitable institution registered under section 12AB of the Income Tax Act 1961. It has organized a skill development program relating to persons over the age of 65 years residing in a metro city in the month of April. It has received the following amounts under the program. Subscription fee for the program is 50,000. Sponsorship fee received from Mahesh Enterprises, a sole proprietorship firm, is 1 lakh. Consideration for supply of goods is 3 lakhs. Besides, the trust has received the donations of 2 lakhs in April from Mehta Builders. Trust is entitled to use this donation for any purpose. Hanuman, accountant of Sri Ram Seva Trust, is not able to determine the taxability of the above amounts received under GST law. He seeks your expertise in determining the same. Determine the value of taxable supply of Sri Ram Seva Trust for the month of April, assuming that the amounts given above are exclusive of GST wherever applicable. Now, so this question, I am giving you time 2 minutes. Kindly do that. So what you need to do is that you need to determine the value of taxable supply. So whatever is taxable, you need to take that and check in the option. Okay. So the answer for this is not 6,50,000, it is 4,50,000. Very good. Keep it up. Why, sir? Because it is first of all, what actually nil is also wrong answer. Because 65 years residing in metro city. So actually 65 years residing in rural area is only exempted. 65 years residing in metro city will be taxable. So therefore the trust providing services by way of educational programs to orphan or homeless children or prisoners or mentally physically abused persons or persons over 65 years residing in rural area, but here it is urban area, metro city, so taxable. And how much is taxable? 50,000, then that 1 lakh sponsorship fees and even the 3 lakhs supply of goods. But donation, they can use it for any purpose. So therefore there is no obligation. So unconditional donation not treated as consideration. So therefore the correct answer is 4,50,000 only in this case. Good. Majority answered correctly. I thought you will answer 6,50,000 or nil, but good. Next one. Dharampal and Company registered under GST in Rajasthan issued an invoice of rupees 5 crore excluding GST to Popatlal and Company without supplying any goods or services at the advice of its accountant, Mr. Sudhanshu. GST at 18% was charged in this invoice. Popatlal and Company availed the ITC on the basis of the said invoice and utilized it in the same month. Determine the amount of penalty leviable in this case. So you need to calculate the penalty that is applicable. If you know the penalty provisions, you can superbly answer this. Okay. So multiple answers. Good. Actually, section 122 subsection 1 says, whenever there is an invoice default or ITC default, on the person who is committing this invoice default or ITC default, penalty will be applicable. Now I am supplier, Dharampal. You are my recipient, Popatlal. Now Dharampal will have a liability for invoice default. So how much is the penalty for invoice default? 100% of the tax or 10,000, whichever is lower. Lower or higher? Higher. So 100% of the tax is what? 5 crores into 18%. So that will be 90 lakhs. So 90 lakhs will be penalty on Dharampal, supplier, under which default? Invoice default. Again on recipient, what is the penalty? On the recipient also there will be penalty under same ITC default. So that is 122 subsection 1. But on the intermediary, who is that intermediary? Sudhanshu. See, there are two sections that are applicable on the person who is involved in the offence, who is not a party to the offence but who is involved in the offence. 122 subsection 1 capital A. So that 122 subsection 1 capital A is whose instance the offence is committed and he retains the benefit. So here Sudhanshu is not retaining any benefit. If Sudhanshu retained the benefit, then it is 122 subsection 1A and the penalty on Sudhanshu will be 90 lakhs. That will be there, 100% of the ITC passed on Sudhanshu. But Sudhanshu is not retaining any benefit, so automatically it will come under 122 subsection 3. 122 subsection 3 will be, general penalty up to 25,000. but here it is given as IGST, so which means that the total penalty we need to compute. So under CGST 25,000, SGST 25,000, so 50,000 is the penalty. That's the reason why last option is the correct answer. Okay, so on supplier 90 lakhs, on recipient 90 lakhs, and on the Sudhanshu it will be 50,000. What if Sudhanshu retained the benefit automatically for Sudhanshu, not the benefit that he retained? Entire 90 lakhs will be the penalty on Sudhanshu. Then next question. Happy Singh is the lawful owner of a residential house situated in Chandigarh. The property has 4 floors constructed on it. Out of the 4 floors in his house, first and second floor are self-occupied, and third and fourth floor have been let out for residential purpose. Ratanjot Singh, who is a tenant on the third floor, has surrendered his tenancy rights to Parminder Singh for a tenancy premium of 5 lakhs on 1st June. Parminder Singh has paid the applicable stamp duty and registration charges on transfer of tenancy rights. Moreover, Parminder Singh will pay a monthly rent of 50,000 to Happy Singh from June. Determine the value of taxable supply in the given case for the month of June, assuming that the amounts given above are exclusive of GST, wherever applicable. Come on, answer this. Okay. What is the taxability in case of tenancy premium? See, whenever property owner gives the tenancy right to the tenant, this tenant, when he transfers the tenancy right to any other person, whatever may be the type of the property, the tenancy premium received by the tenant, so will be always taxable. So here, who is the tenant? So the tenant here is Ratanjot Singh, who has surrendered his tenancy rights to Parminder Singh for a tenancy premium of 5 lakhs. So that 5 lakhs will always be taxable in the hands of Ratanjot Singh. Then what about the property owner? Property owner will get the rent, that is rent with respect to what property? Residential property. Residential property for residential purpose. So nothing is given to an unregistered person is exempted. So therefore, in the hands of Happy Singh, there is nothing. So in the hands of Happy Singh, nil, and in the hands of Ratanjot Singh, it will be 5 lakhs. Okay, that is the correct answer in this case. Next one. The number of digits of HSN out of 8 digits that shall be mentioned in the tax invoice for a taxpayer having 2 crores of turnover during the preceding financial year and making supplies to unregistered person is. So come on, make this fast. I know you can do it. I'm just reducing 30 seconds time for this. Okay. None of these is the correct answer. Why, sir? Why none of this is the correct answer? Because, see, when my aggregate turnover during the previous year does not exceed 5 crores, 4 digits only for B2B supplies. It is B2C, supply to unregistered person. Supply to unregistered person, B2C, it is not mandatory. If my aggregate turnover during the previous year does not exceed 5 crores, for B2B supplies, 4 digits. For B2C, not mandatory, optional. Whereas if my aggregate turnover during previous year exceeds 5 crores, then for B2B as well as B2C, 6 digits we need to enter. So in this case, none of this is the correct answer. Then, Lucky Singh, a resident of Noida and an unregistered person, Uttar Pradesh, working in a private firm, went to Himachal Pradesh for a family vacation via Delhi, Chandigarh, Himachal Pradesh in his own car. After entering Chandigarh, his car broke down due to some technical issue. He called On Roads, an emergency roadside car assistance company registered under GST in Delhi, to repair the car. The car was repaired by the staff of On Roads. On Roads does not have policy to maintain a record of the address of the person taking the car assistance service. The value of supply amounted to 50,000, being labor charges 40 and spares 10,000. The bill was supposed to be generated online through the server, but due to some technical issue, it was not so generated. Determine the place of supply in the given case. It's an easy one. I'm just giving you 1 minute 30 seconds. Okay, here, first of all, it is what service? services, performance-based service in relation to goods. For performance-based service in relation to goods, what will be taken as the place of supply as per section 12, general provisions. General provisions, we need to take location of recipient if registered. So here, so is a resident of Noida an unregistered person, went to Himachal Pradesh, so therefore recipient is unregistered. So in case of B to C, location of recipient in the records of supplier, there is nothing in the records of the supplier, therefore location of supplier will be taken as a place of supply. So what is the location of supplier? So that on roads emergency roadside car assistance company registered in Delhi, Delhi will be taken as the place of supply in this case. Okay. Then next question, see, if you have lag, there is no lag actually. So we have reduced the lag also. There may be some 5 seconds there could be a lag between what I speak and what it comes there. That's why I have given ample time, 2 minutes for each and every question to solve. Now you should not go back in the YouTube. So if you go back in the YouTube and all, if you start watching that, it will be difficult. So parallelly you do that. So thereafter you can watch the explanations also. Then next question, question number 35. This is a good question. Lexcorp Private Limited is a manufacturer of fruit juices registered under GST. It purchases plastic bottles and cardboards and sends the same for affixing stickers on plastic bottles and manufacturing boxes from cardboard to a registered job worker, Hammer Industries Private Limited. These raw materials are sent directly from the place of business of supplier to the premise of the job worker. Lexcorp Private Limited booked input tax credit on purchase of such items. The following transactions took place in this regard. Determine the total amount to be added to the output tax liability of Lexcorp Private Limited in case of violation of provisions of section 143 of CGST Act in different point of times, assuming that there was no extension granted by the Commissioner in terms of proviso to section 143 in any of the above case. So now what you need to compute is the total amount to be added to output tax liability based on the question here. Okay. So now for this question I am just giving 3 minutes time because it takes time for you to answer. Okay. Here, simple here, the goods are sent to job worker. If the goods are not received back within 1 year, then so much of the GST like ITC avail we need to pay as GST with interest. Here if you see, we need to count from the date on which we dispatched it or they received it, because the goods are directly received by the job worker. So see the date on which goods are received by the Hammer Industries, 15/7. Date on which goods are received back from Hammer Industries, 12/7. 15/7, 12/7, 2022. Is it within 1 year? Yes. So in that case, no need to pay any tax with respect to the first one. Second, 27/9/2021, 13/10/2022, beyond 1 year. So that 24,000 we need to pay. So that 24,000 we need to pay tax with respect to that. Okay, 24,000. And thereafter, next 25/12 to 16/8/2023, beyond 1 year. So 96,000. 24 plus 96. Then 25/1 and 23/1/2023 within 1 year. Then 26/2 and 28/2/2023 beyond 1 year. So 42,000. So therefore it will come to 1,62,000. 1,62,000 plus interest at 18%. We don't have 24% interest in GST, only 18%. So therefore 1,62,000 plus interest 18% is the correct answer. The next one, question number 36. 5 more questions. Come on, hold your breath. An appeal to the High Court can be filed under the CGST Act in the following cases: by a person aggrieved against the order passed by the state bench or area bench of the appellate tribunal, by a person aggrieved against the order passed by national bench or regional bench of the appellate tribunal for a matter involving substantial question of law. Choose the most appropriate option. Okay, time's up. Actually 1 and 3 is the correct answer. Good, keep it up. Because second case, whenever the issue is place of supply, we will go to national bench or regional bench. National bench or regional bench, further appeal is with Supreme Court, not with the High Court. Okay. And only when it is state or area bench, further appeal is with High Court. Also, the final fact finding authority is GST-80 only. So only when there is substantial question of law, we can go to High Court or Supreme Court. So 1 and 3 is the correct answer. The next one, the adjudication authority determine 50 lakhs as tax, interest and penalty to be payable by Mr. X on account of wrong availment of input tax credit and 20 lakhs for penalty under 129. Mr. X lost the appeal in the first stage and makes an appeal to GST-80 where the entire amount is in dispute. Compute the pre-deposit for filing an appeal. Okay. See, first we need to understand the pre-deposit provisions. Pre-deposit in case of first appeal is 10% of disputed tax. If it is section 129 penalty, 25% of penalty. But the moment when we go for second appeal, for the penalty there is nothing, no pre-deposit. So only for the first appeal, penalty, pre-deposit is there for 129 penalty, 25% of the penalty. But the moment we go for second appeal, only on disputed tax there will be pre-deposit. What is the disputed tax? 50 lakhs. 50 lakhs into, so 20% is what? 10 lakhs. So 10 lakhs is the correct answer here. Okay. Then next one, 38. Fury Limited India has received an order for supply of service amounting to $5 lakh from a US based client. Fury Limited India is unable to supply the entire services from India and asked NIC Incorporation Mexico, who is not an establishment of Fury Limited, to supply a part of the services, that is 40% of the total contract value to US client. Fury Limited raised the invoice for entire value of $5 lakh, but the US client paid $3 lakh to Fury Limited and $2 lakh directly to NIC Incorporation Mexico, which is approved by a special order of RBI. Fury Limited also paid IGST at 18% on the services imported from NIC Incorporation Mexico. Assuming that all the conditions of section 2 clause 6 of IGST Act are fulfilled, determine the gross liability of Fury Limited if the exchange rate is ₹80 per dollar. Now you need to compute the GST liability, gross GST liability. Okay, see, the answer is simple. First, what will be taken as the export of services? Even though they are actually getting $3 lakh, but the value of export of service is $5 lakh. Okay, $5 lakh and into 18%. But on import of services, see, $5 lakh into 80 rupees into 18%, that is a gross liability. And nowhere it is given that it is export of service under bond or LUT. So which means GST is payable here. Okay. So therefore, what we need to do is that first we need to take $5 lakh. Then even $2 lakh GST payable under RCM. So 2 lakhs or $3 lakh? $3 lakh, because the US client paid $3 lakh to Fury Limited and $2 lakh directly to NIC Incorporation. So the $2 lakh is actually our import of services. So 5 lakh plus 2 lakh, $7 lakh. So $7 lakh into 80 rupees, $7 lakh into 80 rupees, okay, into what is the rate of GST? That is 18%. That will be coming to, so 100 lakh 80,000. 100 lakh 80,000 is the correct answer. Actually, you guys would have missed import of services. See, gross liability. Gross liability means what? Both under FCM as well as RCM. 72 lakhs is correct. What is that? Only on export of services. But on import of service also they need to pay GST under RCM na. That will also be their gross liability. So therefore, 100 lakh 80,000 is the correct answer. Only 10% answered it correctly. So this is a good question. So this can be tested in exam like this. Okay. Next one. Last two questions on GST. Come on. Mr. A has been registered as a casual taxable person for an exhibition program conducted at Delhi. While obtaining registration, Mr. A deposited 40,000 as advance deposit of tax, and after end of registration period, the amount payable before ITC is 35,000 and the eligible ITC is 15,000. The certificate of registration was in force for the whole period, but Mr. A was unaware of furnishing returns. What will be the amount refundable to him? Okay, see, actually here they did not file 3B. When they did not file 3B, then how they will get the refund? So therefore, only when they file 3B, the adjustment will happen and the remaining amount they will get. So they did not file 3B means they will not get any refund. So therefore, none of this is the correct answer. None of this is the correct answer, okay? And that is about this. And so my team just now updated me that around some 480 students have enrolled so for this live test, but many could not attend today. Maybe they are unable to get the link, etc. like that. So that's the reason why. So even some students requested me to upload it in YouTube. So what I will do, I will edit it so that space whatever is there like that I will edit it and I will upload it in the YouTube for the benefit of others as well, and even for you as a backup you can see that. Okay, so fine. Last question in GST. Say this little big question only. Sukhmani traders registered in Maharashtra purchased machinery 2 years back worth rupees 2 crore and it did not avail ITC on the said machinery at the time of purchase. After using the machinery for 2 years, it gave the said machinery free of cost in the month of September to an unrelated person in Punjab. On the date of transfer, open market value of the machinery was 1 crore 25 lakhs and the written down value was 1 crore 53 lakh 530. In the month of September, it also supplied taxable goods worth 50 lakhs to Royal Oil Corporation Limited in the territorial waters. The said territorial waters are located at a distance of 5 nautical miles from the baseline of the state of Maharashtra and 7 nautical miles from the baseline of state of Kerala. All above amounts are exclusive of GST and rates of applicable CGST, SGST, IGST are 9%, 9% and 18%. You are required to determine the amount of net CGST and SGST or IGST payable in the month of September. Come on, answer this. How much is the GST payable? I am giving 2 minutes 30 seconds time for you. Make the computation and select the proper option. Okay, so let's see the answer for this. First one, there is a first transaction, that is they have some machinery which they have given free. So is it for consideration? No. So 7.1c we need to check. 7.1c disposal of business asset on which ITC availed. No, ITC not availed. So it will not come there and it is given to an unrelated person. So consequently it is not a supply. Whereas second transaction, if you see, they are supplying in territorial waters. So what should be taken as the place of supply? Nearest coastal state. What is the nearest coastal state? Maharashtra only. So and where is the supplier located? Maharashtra. Nearest coastal state also Maharashtra. So therefore it will be 50 lakhs into 9% CGST, 9% SGST. So option A is the correct answer. Option A is the correct answer. So majority have answered it correctly. See the next question onwards, that is question number 41. This is related to customs. 10 more questions only. Come on, you can do it. Come on, just half an hour more, we will complete it. Okay, concentrate. In which of the following cases can an importer claim abatement of duty under section 22 of Customs Act? Goods pilfered during unloading, goods damaged by accident due to negligence of the importer after unloading but before examination by the customs authorities, goods destroyed by accident while being removed from the warehouse after clearance for home consumption, goods damaged by accident not due to negligence of the importer after unloading but before examination for assessment by customs authorities. Choose the most appropriate option. Select. Okay, the answer is only 4. First case, why you will not get pilferage? Actually, pilferage is section 13, not abatement. Section 13, no need to pay customs duty, so section 22 will not come. Goods damaged by accident due to negligence. So because of that, second case also no abatement. Third, goods destroyed. In case when goods are destroyed, it is actually remission of duty. First we need to pay, prove that the goods are destroyed, then we will get. So third also not correct. Fourth is only the correct answer. If goods are damaged by accident, not due to negligence. See, abatement section 22 is applicable only in case of damage. So only 4 is the correct answer. Then next, XYZ sent certain goods abroad for repairs, where the notional FOB value of such goods is 8 lakhs. XYZ Limited has re-imported such goods after repairs, where the fair value of the repairs carried out outside India is 2 lakhs. Compute customs duty payable if the basic customs duty is 5% and IGST is not payable on such goods. So we need to compute the customs duty. In this case, we have a concessional customs duty and all the conditions are satisfied. That is the assumption we need to take, and we need to compute how much is the customs duty payable. Okay. So let me give you the provision first. When imported goods are exported for repairs, then again upon re-import of those goods exported for repairs, we need to pay customs duty on fair value of repairs plus freight and insurance both ways. Here we don't have freight and insurance. So what we need to do? So generally when the freight and insurance is not ascertainable, we need to take 20% of FOB as freight, 1.125% of FOB as insurance. Here we have notional FOB. So on that notional FOB, that is 8 lakhs, we need to take, so 20 plus 1.125. So 21.125% we need to take. So 8 lakhs into 21.125% will come to 1,69,000. 1,69,000 one way, but there are to and fro, both should be taken. So into 2, that is 3,38,000. This is the freight and insurance both ways, plus fair value of repairs carried out there. What is the fair value of repairs carried out there? 2 lakhs. So that comes to, that is on that 3,38,000 something plus 2 lakhs. On that basic customs duty 15%, social welfare surcharge 10%, that is 16.5%. So you need to take 8 lakhs into 21.125%. This is one way, into 2 ways, plus 2 lakhs. This is the value. On that value, you multiply 16.5%, you will get 88,770. Very good. Those who answered 88,770, amazing, lovely, keep it up. So that will be taken as the answer here. Okay. So it's not none of these, it's not 1,65,000. So I only created this question. So therefore, this kind of questions also could come in MCQs, because lot of effort I have taken in making the new questions. Okay. Now see this. Which of the following privileges are granted to the status holder as per Foreign Trade Policy 2023? Authorization and customs clearances for both imports and exports may be granted on self-declaration basis. 2-star export house and above are permitted to establish export warehouses. Input-output norms may be fixed on priority within 7 days by the norms committee. Exemption from furnishing bank guarantee schemes under FTP. Deferred payment of customs duty. Choose the most appropriate option. And I shared one FTP video in the YouTube. So I don't know whether you have watched it. Please watch it, because FTP, new FTP is applicable for exam. They can make a question like this. Okay. Okay. See, you need to know what are the various benefits given to these status holders. First, warehouse license to 2-star and above. Warehouse license to 2-star and above. Input-output norms on priority within 60 days. But here, it's not on priority within 7 days. It is 60 days. Then preferential treatment and priority in handling. Exports free of cost except gems and gold jewelry. Self-declaration with respect to authorization and customs clearances. And made in India self-certification for 3-star and above. And exemption from furnishing bank guarantee. Here if you see first point, authorization customs clearances on self-declaration basis, yes. Number 2, 2-star and above can permit export warehouses, yes. Input output norms, no, not on priority 7 days. Exemption from bank guarantee, yes. But deferred payment of custom duty, not for them. Deferred payment of custom duty is for authorized economic operators, not for status holders. So option A is the correct answer. Then, which of the following statements are correct as per general rules for interpretation of import tariff? A durable wooden case specially shaped to contain a music instrument and presented with the same shall follow the classification of such musical instrument. Packing materials presented with the goods therein shall be classified with the goods if they are of a kind normally used for packing, and such goods provided such packing materials are clearly suitable for repetitive use. The heading which provides a more specific description shall be preferred to the headings providing a more general description. Choose the most appropriate option. Okay. So here first case is true. A wooden durable case specially shaped to contain a musical instrument. That is, in the rules of classification, packing materials which is specific should be classified along with that article. So this is a wooden case specially designed to keep the musical instrument, so it is classified along with musical instrument. Even packing materials presented with the goods therein, packing materials presented with the goods therein, along with the goods, definitely it should be classified along with the goods only. Only when we import it as a separate packing materials, that only we need to see, whether we have it as repetitive use or not. But here second one is wrong. And third, the heading which provides a more specific description, yes. So prefer specific over general. So option 1 and 3 are the correct answers. That is first and third. So option A. Option A. The next one, which of the following statements is or are not correct for identical goods for valuation purposes under the Customs Act 1962? Identical goods are same in all respects, including physical characteristics, quality and reputation, as the goods being valued except for minor differences in appearance that do not affect the value of the goods. Identical goods can be produced in any country. Identical goods are produced by same person who produced the goods being valued, or where no such goods are available, goods produced by a different person. Choose the most appropriate option. So if you know the meaning of identical goods, you can answer this. Okay, time's up. What is the meaning of identical goods? Identical goods are same in all respects, including physical characteristics, quality and reputation, except for minor differences in appearance. No. So here the correct answer is only 2. Identical goods can be produced in any country. That is only false. Remaining and all. Actually the question is, which of the following statements are not correct? So first one is correct. Second one is incorrect. Third one is also correct. Okay. So only second is incorrect. Then next, for the valuation purposes under the Customs Act, which of the following transactions would be considered as having been made between related persons? A foreign company A Limited having a joint venture with Indian company B Limited in the name of AB Limited, an Indian company. A Limited holds 51% shareholding in AB Limited. The transactions between A Limited and AB Limited. Second, a foreign company A Limited having joint venture with Indian company B Limited in the name of AB Limited. The transactions between A Limited and B Limited. A Incorporation, a company in USA holding 4% share capital of importer company B Limited, an Indian company. The transactions between A Incorporation and B Limited. Choose the most appropriate option in these 3 cases which are covered under related party transaction. Okay, only 1 and 2. 3 is not related. See, 1 is related because control more than 50. Second one is also control is there. Joint venture, a foreign company having a joint venture in Indian company. So in the name of B Limited, in the name of AB Limited. So definitely that will also be treated as control. But A incorporation, a company in USA holding just 4%, that will not be called as control. So therefore 1 and 2 is the correct answer. Then next 47. Outline the stepwise procedure of import of goods into India. So grant of entry inwards, filing of import manifest, unloading of goods, assessment of goods, filing of bill of entry, payment of duty. In this, which one comes first, second, like that, order wise you need to select which is the correct answer. Okay, see, sometimes you need to do option test, simple. So first we need to file import manifest and then grant of entry inwards. So second will come first. So which options have 2? So therefore B and C. In the 2, 1. So just check that options, you will get to know. Then 3, that is what? Unloading of goods. Then after that, filing of bill of entry. Then only assessment and then only payment of customs duty. So first the goods will be, first the person in charge will submit import manifest. Thereafter grant of entry inwards and thereafter unloading of goods. Then importer will file a bill of entry and then assessment and thereafter payment of customs duty. So therefore last, good, majority answered correctly. Then certain goods were imported by air. The ex-factory price of the goods is 100 rupees. The cost of transport, loading and unloading and handling charges up to the place of importation is 45 rupees. Out of which the cost of transport from factory of exporter to load airport and loading charges at load airport is 20 rupees. Demurrage charges is not there. The cost of insurance is 10 rupees and there is no demurrage charge here. The cost of insurance 10. Determine the assessable value for payment of customs duty. Okay, so this is an interesting question. Actually, ex-factory cost is 100. Okay, and 100 plus you need to add 20 rupees, that is factory of the exporter to load airport and loading charges in the load airport 20. So 100 plus 20 is FOB. So FOB in this case is 120. So for this 120 we need to take freight. How much will be the air freight? Actual or 20% of FOB, whichever is lower. What is actual? While taking actual, you need to take from the factory of exporter, that is 45 or 20% of FOB, that is 120 into 20% is what? 24. So whichever is lower, 24. In this 24, already 20 we considered in FOB, so only 4 should be added. So we need to take first 100 ex factory. For that 100 we need to add 120 from factory of exporter to the load airport and loading charges. So it became 120, that is a FOB. 120 into 20% is what? That is 24 or actual. See, actually this 24 rupees should be compared with the transportation cost from the factory of the exporter. So therefore that is 45 or 24, whichever is lower is 24. From the 24 we need to deduct 20 rupees, that is freight from factory to the airport and loading charges already considered in FOB. So 4 rupees we need to add. So 120 FOB plus 4, 124 plus insurance 10. So 134 is the correct answer. 134 is the correct answer in this case. Then 2 more questions. Next question. Which of the following statement is false? Anti-dumping duty is imposed when the article is exported from any country to India at more than its normal value. Absorption of countervailing duty is said to have taken place if there is an increase in export price of an article without any commensurate change in the resale price of such article imported from the exporting country or territory. Safeguard duty shall not be imposed on articles originating from developing country if the share of imports of that article from that country less than 3% of total imports of that article into India. Central government may exempt notified quantity of any article when imported from any country into India from whole or part of the safeguard duty. Now in this you answer which is the correct option. Which of the following statement is false? That is the question. Okay, first point, anti-dumping duty is imposed when any article is exported from any country at more than its normal value. No, less than its normal value. First one is false. First one is false. Why first one is false? Actually, when it is at more than its normal value, anti-dumping duty will not come. Less than its normal value. So, first one is false. Second, absorption of countervailing duty is said to have taken place if there is an increase in export price. No, decrease in export price. Decrease. So, only when the exporter tried to decrease the price so as to absorb the anti-dumping duty or anti-subsidy duty. So, second one is also false. Safeguard duty shall not be imposed on articles originating from development country if the share of imports of that article from that country is less than or equal to 3%. So, third one also wrong. Third one also wrong. Less than or equal to 3%, not less than 3%. So, first, second, third, everything is wrong except for central government may exempt notified quantity of any article when imported from any country into India. So, 1, 2 and 3. 1, 2 and 3. Guys, you might be checking the MCQ booklet of ICI and thinking that okay, I have taken the questions from there itself and I have given. No, I modified it to a greater extent. So, by mistake if you have referred that and thought okay, the same answer, it will be no. So, that is why you will be finding a different answers in this. Okay. So, therefore, 1, 2 and 3 all are incorrect. Only 4 is correct. Then last question for the day, Sapphire Enterprises imported some goods through vessel from USA in the month of April. The value of goods imported was 6,50,000. The date of entry in goods was 21st April. Basic customs duty on the said date was 10%. Further, Sapphire Enterprises filed bill of entry for home consumption on 25th April. Applicable basic customs duty on the said date was 20%. And even applicable rate of IGST was 12% and social welfare surcharge was 10%. Ignore GST compensation cess and agriculture infrastructure development cess. However, before inspection and clearance for home consumption, Sapphire Enterprises found that the goods have been damaged owing to negligence on the part of the proper officer. The proper officer accepted that due to said damage, the value of the goods have come down to 4 lakhs. Compute the total customs duty payable in this case. Come on, make it fast. Okay. The answer for this is 1,46,560. Correct answer. How, sir? See, this is abatement. Actually, we need to recompute the customs duty on reduced value. What is the reduced value? 4 lakhs. Take assessable value 4 lakhs. And what is the customs duty? Date of presentation of bill of entry or grant of entry in words, whichever is later. So, what is the later date? The later date is 25th April, on that day 20%. So, 4 lakhs into 20%, that is 80,000. Okay. And for that, we will be taking social welfare surcharge 10%, that is 8,000. And on that 4,88,000, 4,80,000 basic customs duty, 8,000 social welfare surcharge, on that 12%, so that will be coming to 58,560. So then we will see what is the duty payable. 88,000 plus remaining 1,46,560 is the answer.